Aspirants, this is Varun Kumar. Today we are going to discuss about functions of RBI, which is very important to the RBI exam. So let's start the video. Today now we are going to explain about functions of RBI and core rules and instruments. Okay. Now let's move to the first point. First, let us understand India's central bank foundation. As we all know, RBI was established in 1935 April 1st. RBI serves as a national central bank. Its headquarter is in Mumbai, and the RBI stand as a financial system and as a pillar of an Indian economy. Okay. Now let's us move to the next point. The first point is monetary authority. What is monetary authority? Monetary authority is nothing but policy formation. RBI formulates and implements the India's monetary policy, serving as a primary tool of economic management. Policy formation means which makes the policy and reduce and increase the inflation rate or manage the stabilize the inflation rate. Okay, now next what's would be the objective is balance the two critical goals, maintain the price stability and sustainable economic government. RBI's goal is to maintain the stability and maintain the inflation should not go high and deflation should not go so low. Okay, now let us move to the first direct monetary instrument. There are direct and indirect monetary instruments. Now let us discuss about direct monetary instrument. In direct monetary instrument, we may get CRR, cash reserve ratio, which is nothing but the percentage of deposit that commercial bank must maintain with RBI as reserve. For example, suppose I'm a bank and I have deposit of 100 rupees. I should reserve 4 rupees, 4%, 4 rupees as an cash reserve ratio in with RBI. Okay, now let's move to the statutory liquidity ratio. Requires bank to maintain a specific percentage of their deposit in liquid asset like government security, ensuring financial stability. Like for example, if I have gold security bonds, I should be keep it some percentage in RBI. Okay, this is known as SLR. Now let's move to indirect monetary policy. In indirect monetary policy, the first is LAF, Liquidity Adjustment Facility. I am teaching you because nobody teaches this in detail concept in YouTube, so I am teaching you. For the first is LAF, primary tool for daily liquidity management and through repo rate and reverse repo rate operation. Now is open market operation, buying and selling of government securities to regulate money supply and interest rate. Next is marginal standard facility, emergency lending facilities for bank. Like for example, if any bank needs emergency money, so MSF will be helping. Next is market stabilization scheme, absorb the excess liquidity. For suppose there is more money in the market, RBI absorb all the liquidity money and take it by government securities. Okay, next is long term repo operations, provides long term funding to banks to at policy repo rate. Okay, for example, if repo rate is 4.5, 5.5, 520, they will lend a loan on 5.5 percentage. The next is the currency and government government function. Sole currency issuer. RBI is the only institution in the India which issues the currency note, coins, etc., etc. Okay, so we call it as a sole currency issuer. And it is central government banker. RBI act as manager to the government, like a banker to the government. Now we go to HDFC Bank of Baroda, Kotak Bank. As we are a customer, for RBI, customer is banks and government are the customers, and state government bankers, and also maintains the book of state governments, how much state government is spending, how much they need. So it all maintained by the RBI. The next is banking regulations and foreign exchange management. First, let us see the banking supervision. RBI supervises commercial bank, NBFCs, and cooperative banks, and like RBI is done regulatory of these all bank. If you want to do anything like in financial institution, bank, NBFC, you must take permission from RBI. Licensing, regulation, capital shifting, risk assessment, consumer protection, all this come under bank supervisor. And foreign exchange authority. RBI is administrator of foreign exchange management, and India's foreign exchange reserve and work stabilize the rupee to international market. They supply the rupee to the international market. Now let us move to the next is financial stability and payment system. The financial stability monitors systematic risk across the financial system and serve as a lender of last resort. Like for example, if any bank is edge of bankruptcy, for example, Yes Bank was edge of the bankruptcy, RBI told SBI to save the Yes Bank. So it is known as last resort of bank, lender of last resort. And next is payment system oversight. Regulate and supervise the payment and settlement the system, including UPI, etc. For example, if we do any transaction, if you send money to a friend, the money will go smoothly, right? It is called as payment system oversight. Development role: promote financial inclusion, support rural agriculture credit, and encourage fintech innovation and broader economic development. The last is summaries. As we know, RBI is a pillar of Indian economy. RBI supplies the monies and it provides stability and it gives security to payment and it bankers to the bank and it is the issuer of the currency and it is the broker for government in foreign exchange. Okay, these are the functions of RBI. I hope you understand. If you understand, please like and subscribe this channel. We will be providing these types of content all the time, and we are giving this information for next 2026 RBI Grade B exam. I hope you all join with our course. So, thank you for watching this video. Thank you.